GWSCPE model. Here is one last show of consistency when applying this model in profit making. So here was an entry we took yesterday, and this entry was taken having already expected that there will be a continuation of the downtrend. So one thing is to know the trend, another thing is to hold a position for the trend. So we had the formation of the SBL, which is buy base level here at 3316.61, and then its deviation limit at 13.61. Then we saw the market expecting to go all the way down 300 pips from 16 to 06, 3296 and 3286, which it happened to do the first time, and then having done so, it returned back up. But since the day's trend was settled to be a downtrend, it was expected to be one of the formations of the BPO structure, because it is a correction move, not a trend change. All right. So, and we have a projection that whenever there is a BPO structure, the market is expected to return back into trend, because the BPO structure forms on a correction. Okay. So, and this is a correction impulse. Now we'll look at the BPO structure that has formed here and used to do our next projection, that the market is expected to go a double of the correction impulse that formed the BPO structure. So if we look at this BPO structure starting from the correction impulse ISL here, which is at 3266, all the way up to the correction impulse high here, which is the TCL, trend continuation level or correction high at 3309. You see that this was over 500 pips. All right. So over 500 pips here. Now, having had 500 pips here, it means the market is expected to go 500 pips below the entry price here. So look at that, 3266.89. Now, we saw the market has gone all the way up here, and we had sold down to this point, and then we saw opportunity again to sell down further. All right. So now that we are selling down here, we know that we are going to sell all the way down to the end of the BPO structure, which is from 3266. 500 pips down or 50x down further will be 3216. Okay, 3216. So now let's look at that 3216. We had the market down, and the market has gone all the way down to where? Let's look at it. 32. Let's look at that. 3213. So it completed the 500 pips projection, as you can see, showing that the BPO structure we use for entry is exact and accurate. And what is the outcome? Look at the outcome here, that we have one single trade taken based on the BPO structure, and it is running over 1,000 pips profit. So now we can begin to close buy. Okay, to take the profit we have here. So you can see how we now close buy to take the profit we have here, showing you that when trading with the GWSCPE model, you can only make profits. It is profit all the way. No matter how long you hold it, you can only make consistent profit. And this was just one trade held down from a previous day, so that it can complete the strategy that was chosen to place the entry. And here was the strategy chosen. The strategy chosen was the, look at it again, BPO structure. And this is the first time we are demonstrating how effective BPO structure is. So BPO structure, how many X did we pack here? This was 500 pips down, then going to the entry here at 3292. So let's look at how many pips total. So 6 to 9, total of 8x. 8x on one trade. Okay. So what are we talking about? 80x. 80x on one trade. 800 pips on one trade. Let's look at the history here. So look at it from 3292 all the way down to 3222. This is For us at the closing price, we are already getting 70x. Okay, 700 pips of trade. 70x, as you can see here. All right, and this is courtesy of GWSCPE model. Now look at, we held two converse entries. See how it reduces the amount of loss here despite how long it was held, to show you when the market is moving into trend and you already have your GWSCPE model set up, you can only make profit on that trade. You see how it converted everything into profit, only minus 3.52 negative, and all others are positive. And then for the spread closing, when we close by, we only have 0.000.00. Okay, which shows you that we have no loss with the GWSCPE model. So this is what confirms our model. You can start applying this now as a victim of loss by joining CCN Cybercorp's 10x recovery hyperloop. Yes, 10x recovery hyperloop. We are beating the 10x margin. Okay, we said 10x, but we beat 10x. All right, we are covering over 70x. You can see here, this was just one setup that gave us 70x. Now, if we want to do anything else, you see, our projection is still intact. Okay, we will now look at once again where the market currently is. You see, this was a trend impulse because the trend was meant to continue down. So this is the trend impulse and it has got to 3316, and this is the last what CROL of the trend impulse. So we can take an entry here. Let's take the first entry for today here as a buy. So you can understand why we took the buy here, 33 here, because this is a level where the market is expected to reject based on the fact that this is a trend impulse. Okay, so this is a trend impulse and this is a correction wave expected from the trend impulse. So now we have a buy here. The reason for taking the buy, let's explain once again, is because we have no correction impulse formed yet, which is to give us what? The high. All right, in that case, we need a correction high to form so that we will now start projecting a continuation of the trend downwards. All right, so we are going to take first buy here at 3219. Okay, let's look at the next level we are going to do. This is where we are having another buy opportunity at 3213. Okay, so we are taking this based on our projection for a correction high to form. Now let's look at the previous correction high we had here for today. We had this correction high formed here. This was a major trend impulse, and this was a minor trend impulse. All right. So now when we have a minor trend impulse, what does it tell us? It tells us that a major correction should take place afterwards. So minor trend impulse was not fully corrected. Okay. Remember this rule we stated 300 pips when we don't see a correction that happened afterward the formation of a minor trend impulse. All right, so let's look at what the day's trend was projected to be also. So we had the trend impulse, trend impulse, trend impulse. Okay, and now this was the first level formation for the day. Let's look at that so we understand the day's projection. So this is a buy base at 3238. So 3238, where are we looking at as our deviation limit? 3235.47, 3235.47. So you see, so the day's trend was projected to go all the way down to 3205. All right, so we still have a downward trend going all the way down to 3205. Now that we know the day's trend, we are now going to look at opportunities to sell. Okay, so we now know that we want a major entry to be on a sell direction, and that is what we'll focus on doing next. So while we are looking at that, we are going to have more entries in the sell direction. So this was an entry taken from, let's look at 3219.05. So 3218.05 will be our sell. We can, however, take that early. Let's take a sell. So 3217.09. So it means that above there, we are buying below, or return back to 3217.09, we are selling. Okay. So this has begun for us to continue our move towards what? A trend. Let's look at it with what we have here now. Even with only these two entries, we are sure of profit on this trade. So how profit is guaranteed on exit is that we do not automate our exit. In other words, we do not set a stop loss or a take profit. Since we are not setting a stop loss or a take profit, one thing happens for us, and that is we make profit on that trade beyond how we would have made when we set a stop loss and take profit, because we will not have to close by the difference of the spread between the buy and the sell entries. So this is different from hedging, which means our GWSCPE model haven't worked out the maths, okay, of entry levels. If the market continues to move in the direction of our main entry projection, which in this case we can go off and know that the market will definitely go all the way down 300 pips. All right. So how do we know that? Because we have the market haven't set what a first for the day, a buy base, and broken the buy base at 3.5. Okay. So look at that. 38.87. So 35.87 will be the buy base. All right. So you see the market here rejecting, and this was the break of the buy base. After breaking a buy base, it went to retest the buy base, okay, and then rejected the buy base on 3 occasions, which is the deviation limit of the buy base, and continued downwards. Then return back to retest again the buy base. You can see here, no breaking of the buy base, then comes back down. This was a second attempt to break the deviation limit of the buy base, okay, and this is the entry proper that began the move. So from break of buy base, this is where we want to start projection. From 3235, the market is expected to go to 3205. All right, 3205. So the market is right now at what? 3214. So it means we have 9x all the way down. So if the market goes all the way down by 9x, we are making a good profit, okay? We are making good profit on this trade. And that is the beauty of the GWSCPE model. It starts with, first of all, choosing a strategy. Right now, the strategy we are trading with, initially we are traded with the strategy for the BPO structure based on the correction impulse. And the rule states that when the correction impulse exceeds 200 pips, then the market is to reverse back into trend by going, a double of the total spread or pips of the correction impulse ISL and TCL. That's correction impulse start level, and then is a correction trend continuation level. All right, or correction high in the case of a downtrend, or correction low in the case of an uptrend. All right. So here the market is to reverse back into trend by a double of the total move of the correction impulse that formed what? The BPO structure. So in this case, we had a correction impulse that was over 500 pips. It means that the correction for the reversal into trend will go 1000 pips from where the correction high. And that is what happened. So from correction high, the market had to go down first 500 pips. Now, because it was going to make a major move, whenever the market has a major move to make, it first of all struggles around an area so that it can hide that opportunity from traders. So traders who do not know the structure, do not have this strategy, we never know that this market has a potential of going where 1000 pips. All right. So, but because of the system cyber cost loss recovery blueprint, where all of our strategies are tested, okay, and proven with scientific model, okay, coming from the scientific trading school, developed by our own team, all right, and applied by our agents, CCN Cyber Corps agents, okay, helping victims of cybercrime recover their losses using our GWSCPE model. We are able to use the right strategy at every time to project our entries, okay. So when we have the strategy, the next thing is to have an entry, all right, plan, and then a capital protection. So based on our entry model, we use what? First of all, an idea for finding the level where there will be high volatility. Once we know a level for high volatility, we are going to take first entry and then have what? The capital protection in place. So based on capital protection, we are going to have multiple entries, and that is what puts us in profit. So look at this very entry. You can see that it has started yielding profit. As long as we hold this entry down to 3305, we are going to make more profit at the end of the day. So GWSCP model only guarantees profit. And look at the history for today. We have already made over $750, which, looking at the capital that was traded, let's look at that. Okay, we have made over 10%. Okay, 10% of the initial capital that was traded. The initial capital that was traded for the day was less than $2,000. All right. So we are 10% to $2,000 would have been what? $200. You can see that. So we have made over, okay, not just let's look at this, not just 10%, okay, we have made over 30% in one trade setup. So you see, as our projection is going accurately because we have the right model for trade. You can see that. So this is what others cannot see that we CCN Cybercorps are seeing. And with that, you see how the market is approaching our profit zone, which is where 3205. And what is that strategy we are using to base that on? We are using the day's what? Formation of first buy base. All right. So the formation of the first buy base at 3335. We know that the market should get to 3305 to complete the first move. So which means we are going to exit this trade. Okay. Let's exit this trade in profit and get ready to buy at where? 3305. So let's look at that. So that is how we trade. However we do it, we always make profit. So let's look at a summary of the current trade. You can see that the difference between the trade and the trade that was in loss was $2 loss. The other was profit, despite how the market moved. GWSCPE model is mathematical model. Okay, it allows us to calculate exactly where we should have profit, where we should see volume, high volatility, and we only want to take where there's going to be high volume. So we look for entries at key entry levels where there will be high volatility and expect a volume gain in the market. Okay, then we work based on that. So we can do this a number of times and prove that you use this model to recover loss. No amount of loss is too big for the GWSCPE model, and that is courtesy of CCN Cybercorps. Welcome.